Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Again, another step forward for President-elect Joe Biden, now been confirmed by the Electoral College over that 270. Interestingly, it looks like he's going to end up with 306 votes, which is the same number that President Trump had over Hillary Clinton in 2016. Now, what is quite interesting is obviously President Trump still hasn't given a concession speech. But what is interesting is that a few of the major sort of Republicans now have come out and congratulated President-elect Biden on his victory. Most notably will be Mitch McConnell. Now, President Trump is still claiming that obviously the election was stolen, still had more votes than previous years. Certainly he did. He had more votes than he got in 2016. The problem is that President-elect Biden just had about 7 or 8 million more votes. So it is going to be interesting to see if President Trump actually does come up with a concession speech. Say, as yet, so far, he hasn't done that. And, it's really just looking sort of like sour grapes at present. Back of that, moving forward now, inauguration will be 20th of January. And, certainly the US economy is now looking in a little bit better shape. Obviously, you've got the good news with the vaccines from sort of Pfizer, Moderna, also AstraZeneca, and that really comes on the back of sort of increased cases in the US and really getting up to near critical sort of levels really in some hospitals. And obviously with the Christmas period coming up, potentially super spreader events sort of taking place as families get together. It's going to be very interesting to see the numbers in the first couple of weeks of January. But as I said, the good news is, there is a vaccine out there and it's now a question of getting that rolled out. The problem is, the US, with over, 240 odd million people, it's not something that can just be done overnight. It's going to take time. So interesting looking forward now to 2021 for US equities. You've still got a low interest rate environment. You've got the Fed being very accommodative and really trying to sort of support the economy in every which way they can. And so you've got a new administration coming forward, which, although sort of potentially looks a little bit sort of business unfriendly from the sort of, a democratic normal sort of perspective, given the circumstances with the pandemic and everything and trying to get the economy sort of moving, you still feel that, they will be supportive for the US economy. Given that most sort of investment houses now are looking for US equities to be up around sort of from anywhere from 5% up to as much as maybe 20%. Some houses are predicting the S&P for year end 2021 could be as high as 4,500. And that's quite interesting because, certainly if you look at the fixed interest environment, you've still got a 10-year that's sort of trading around sort of 0.8, 0.82. That's still well below 1% and certainly well below the 2% we were trading sort of 15, 16 months ago. So given you're getting very little return in sort of the fixed interest environment, there is this sort of Tina effect. There is no alternative, and people are looking to invest in equities to get a reasonable return. When you bear in mind as well that US households potentially have as much as $1.5 trillion sitting in savings accounts that really hasn't been spent in 2020 because of the pandemic. So on the back of that, oil is obviously trading pretty well. WTI around sort of 46, 47 bucks a barrel. And it'll just be interesting to see how it sort of trades through in the first quarter of 2021. Good news as well from the UK. The Brexit deal looks like potentially there is some headway being made. Very interestingly, the EU has come out and said that there is now a pathway forward to getting a deal done. That's obviously seen the British pound sort of trade higher, and really comes as welcome news as the UK faces a sort of second and third wave of COVID that's really causing pretty major havoc. On the back of that, London has increased its level to tier 3 now in lockdown, and really pretty severe just before Christmas. But obviously the good news is, the vaccine, the UK was the first country to start rolling out the Pfizer vaccine. But again, it's just a question of time. It just can't be done overnight. If you look at trying to vaccinate people, the UK population is probably over 60 million. The US is sort of over 260, 270 million. It's not something that can be done, say, in sort of 3 or 4 days. It's going to take months to get everyone vaccinated. Australia as well is doing reasonably well on the economic front, really being buoyed by sort of high commodity prices. Iron ore is really trading up near record prices, really on the back of increased demand from China. Now, at present, obviously, there's a bit of a sort of spat between China and Australia, but I think both countries need to sort of get that sorted. Certainly, China needs the iron ore coming out of Australia because, there's really not an alternative for them in terms of supply routes. For the quantities they require. Here in New Zealand, latest GDP figures to be released today look like they'll be pretty good numbers, around a sort of an annualized rate of around sort of 14-15%. That obviously just shows a really sharp rebound in the economy from the COVID lockdown. Now, obviously, those sort of numbers are unsustainable, sort of quarter on quarter. But I say it does really show a pretty sharp sort of bounce back. And now it's just going to be interesting to see how the economy can sort of pick up in first and second quarter of 2021. Now that will certainly be helped if we do manage to get this Trans-Tasman bubble open. Let's talk about that being open by the end of March. But again, here in New Zealand, in terms of the vaccine, you've got just under 5 million people. Again, it's not something that can be just rolled out overnight. It's going to take time. Now, certainly New Zealand economy obviously being buoyed by the housing market. That's really on the back of lack of supply, increased demand, and record low interest rates. So looking into 2021 is going to be very interesting. Certainly, we hope it can't be worse than 2020. 2020 was really a pretty horrific year. But looking forward, you've still got record low interest rates. You've got authorities that are trying to help the economies as much as they can. And on that sort of front, given the low returns coming out of fixed interest, equities still seem to be sort of the major game in town, providing some reasonable returns. So from Bay Financial Partners, we'd like to wish you a very Merry Christmas and a Happy New Year, and we look forward to speaking to you in 2021.